Good afternoon, ladies and gentlemen. This is Clueless 8, and this is the end of the week report for August 1st, 2014. Make sure the dates are fine. Yes, it is. August 1st was a Friday. We have had a tremendously volatile week. We have had some very large winners, and we have had some that didn't work out. However, the winners in the form of Twitter, in the form of LinkedIn, in the form of the other high beta momentum stocks that hit or that had direct hits. By now we know what direct hits are. That's our hits directly as we have shown on the charts of previous occasions. Paid the bills very handsomely. There are This is a very mixed market. I'm not going to get into the nitty gritty, which will take hours and hours. That will come about very soon in the form of webinars where members and free trial subscribers will be allowed to ask questions. I'll have a little bit more of a better time frame, our time allotment, I should say, to answer those questions in the best possible way. Keep in mind that I'm a very passionate student of the market, and I'm learning every day just the way you guys are and gals are, okay? And I have had a little bit more experience in the markets, but in no way or form am I somebody who's been in the market for 20, 30 years. On the trading side, as I've mentioned to you before, it's been a little bit more than 10 years specifically that I've been trading, and then of course over the last 4 years or so on a full-time basis. So saying all that, my real world experience, where I incorporate many different facets of game theory, human behavior, my behavior, my cultural and global understandings of world politics and economics, how people behave, have helped me navigate these markets tremendously well. Saying all that, let's hit the charts directly here. I'm going to show you a different platform today, and I've shown this before. This happens to be the Dow Jones Industrial Average on bar charts. That's run off my proprietary platform. So, saying all that, I have noticed one thing over the past couple of years and over the past year or so, more so than ever, that when I use different platforms to chart, I do get a slightly different visualization of what's happening to the markets. Not to say that the numbers are different, it's simply that when I look at it visually, I actually have an added advantage of the different indicators, different what should I say, crystal ball readings on the charts than I do if I just concentrated on one platform. For example, my charts look a little bit different, and you will see that very clearly today. This is a pivot chart that I put together on bar charts, different than what I use on Warden or on TOS, Think or Swim. So again, this gives me an added advantage. This is a battle. The better weapons you have in order to fight this battle, to profit, to navigate the markets, the better off you are. So enough of the philosophy, now straight to the charts here. This is the Dow Jones Industrial Average, and this is what has happened. This is the daily chart. I'm going to make this very simple, and everyone read at their own time. These are the pivots. I'm sorry. This is these green lines, and ones you can look up here. This is the pivot levels. Red obviously means lower, and green means higher. So you can figure out yourself what the pivot levels are showing here from a standpoint of where we're going. I drew a trend line from October of 2013, where we had a almost a triple bottom on the Dow at around 14,650. Wow, seems a long time ago, right? And this was the acceleration phase that I've shown quite a few times on my other charts. So what do we see here? Very clearly, we are looking to test this uptrend line at around 16,400. We almost got there. Don't need to get too detailed here. You can do your own little, have the effort to do your own little homework as I'm walking you through this. So 16,400 is uptrend line. We hit the uptrend line here very dramatically on the 5th of February. I'm sorry, 4th and 5th of February, and this is what happened. I also drew the pivots. Again, I repeat, very simplistic term. Green is up. This is where we can go off the pivots, and red is down. So we still have, let's say, a lower red pivot here at 16,355. I also drew overlay the Fibonacci retracements. Okay, this is on a daily level, so it's a little bit more of a swing thing going on, and we basically crossed below the 78.6% fib. That was 16,588, and we have two more below here. So if we look at this as a 100% retracement from this low, then we're going to retrace down towards these levels. So we can see, we can see that again. Let me go back. I'm a big believer of the 50 fib, not because I believe in anything, but the fact that it's worked very well for me over the years. So if you look at the 50 fib, we're looking at 15,845 right here, 15,847.95 as the retest of the a full retest of the 50 fib. Will that happen right away? I don't think so. Will that happen sometime between now and fall? Yes, I do. So that's just my take. So this is this is the daily chart. Let's look at a shorter term view and what's going on. Oh, let me cover this. Looking at the simple stochastics here, very oversold every time we got to these levels. Right here, for example, where's my draw chart? There we go. So look at this here. Look what happened here. All right, but we also had multiple falls. This was 3 times. One time, and then so it's there was multiple retests, and then we took off. So this is the first retest here. So I wouldn't be surprised if we have multiple retests too. To retest this level, slip down below, we can even get down to 16,000. I don't see any reason why not. So that would bring us, I think, this level here, 16,000, also happens to be where we were in April. I believe it was April 15th when we launched the service, right here. Okay. Tax day. So multiple retests, and then we move from here. Let's see what happens. I will show you the 60-minute quickly, which is a shorter term view, and draw the fibs on it. Here's 60. We have a sharp falling wedge, but it broke under. This is what I'm seeing. I got 2 minutes to cover this. Okay. Okay, so if we're going to retrace back, I start with the 0 here and the 100 here as the highs at the top. 50 retracement brings us up to 16,813. Right here is the 23. I think that's where we're going first, which is 16,621. So we're looking at roughly about 120 points. Okay, 130 points. That would touch the lower end of this falling wedge. And then, and the lower Bollinger, by the way, is 16,351. So don't be surprised if we slip there by Monday or even Tuesday before we make a move up. But one with the other, we are looking like there's a positive divergence going on here. You can see that. Here's the positive divergence. We were down here at these levels. Let me get this draw chart out. Look at this. We're here now. Oops. So on the stochastic simple visualization, okay? So this was when we fell hard here, this went there, and we kept on going down, and guess what happened? Now the stochastics are actually moving up. So that's a minor positive divergence. Positive divergence take days to develop. So what am I seeing here? I think we get up and we actually test the 16,800 level here, and that would be, and we'll see what happens after that. It also coincides with the upper end of the Bollinger, all kinds of stuff going on, right? In the short term, we're looking at about 16,635 as a move, and the 50% retracement is 16,800. So that's where we are. I'm going to move on to the different charts, and keep in mind 50% retracement, 38% retracement, 23.0. Just use simply, just do paper trades, figure out what's going on. There are no guarantees to these things. This is the market. This is the stock market. But this is the way I've seen it happen before. These are short-term bounces. We call it a dead cat bounce. Let me move on.